now. All right, here we go. All right, so first and foremost, guys, I am Kirk Seal. All right, I'll be taking through this information. And when I was talking just now, I spoke about a pattern that you're going to see very often. And this pattern is pretty much all you need to know when you're going through this trading journey. If you understand this pattern, then you'll be able to be profitable in these markets. All right, the pattern is going to go two directions. This is if we are buying, if the market is increasing in value, and if the market is decreasing in value. All right, this is it. These are the two. So just like when we were much smaller, we were learning how to count, we were learning our alphabet, we're learning our colors, maybe not colors, but you're learning shapes. I want you to think in terms of learning shapes. When you see this, it's just like when you learn what a circle was, right? It didn't make sense at first, but you saw it often enough. Then when you go out in the wild, you're like, okay, that's a circle, that's a circle, that's a circle, that's a funny looking circle, and you're pretty much good to go. So we are going to continue this conversation speaking from this perspective here, the one on the left, right? Which is when we are buying. This on the right is when we are selling. Part of what we covered last week is this pattern has a structure to it, and that structure is going to look a lot like this. The lowest point of it is going to be shockingly called the low. When price comes up and reaches what we call a ceiling, that's going to be a high. When it comes back down and it's not as low as the original low, this is now a higher low. And this right here, when we get a high that goes past the previous high, this is now called a higher high. When this happens, this pattern, which is just one cycle of the pattern, when this repeats itself, right, a number of times, so it's going to look like this. We call that a trend, right? That is a trend. That is how the market moves. That's how money moves. It goes up, comes down, goes up, comes down, goes up, come down. But overall, the ups are stronger than the downs. So you end up actually traveling as opposed to just staying in place. All right. Because you get a new high point every single time. And that's when we buy. We buy when currencies, we buy when assets are increasing in value, and we sell when they're decreasing in value. Okay. So buy, right, is going to be when we have a series of higher highs and higher lows. Once we continue to get a series of higher highs and higher lows, we can continue buying. One of the other things that we mentioned when we were on the call last week is the place where we like to buy is the low point, right? There's a low point that we like to buy at, which is usually the higher low. All right. The analogy that we made is if you were looking for electronics and you knew Black Friday was coming up, would you rather purchase this electronic during Black Friday sales or when prices are regular? All right. Last week, most people said we'd rather buy it during Black Friday. Why? The discounts are amazing. We're talking 50% off or more. So conceptually, as a principle, when we are looking for buys in the market, we want to see a discount of 50% or more, right? We want to have 50% or more off of the sale price. All right. So these are just principles. If you get less than 50% off, then there's not as much room for profit. Therefore, you don't need that trade. You can wait for something better. If you're getting 50% off, 60%, 70, 80, 90% off, that gives us a lot more space for profit, which is a lot better for us, which is a good trade. All right. So those are some of the things that we covered last week. And yes, the same is going to be true on the sell perspective. I'll just give you the structure so that you have it. Since it's a sell, it's going to start from a high point and it's going to go down to a low point. So right here at the top, this is where you begin for a sell. It's going to be a high. This point right here is going to be the low. This one over here is going to be a lower high. And this here is going to be a lower low. So anytime we are looking to sell, a sell is a series of lower highs and lower lows. Right? And it's going to look like this. Lower highs and lower lows. Once this is happening, this tells you that price is decreasing in value. And similar to a buy, the point that we want to sell from is going to be a lower high. That's where we sell from. And same thing applies. We're going to see if we get, well, since it's a sell, instead of a discount, we're seeing if we can get a premium of 50% or more added to the original price. Right? Because, you know, we've grown up hearing you want to buy as low as possible, sell as high as possible. All right, let me see. 1, 2. Guys, let me know if you are hearing me okay. If you are, you can just put a 2 in the chat. Someone just messaged me. You could possibly, let's say, try coming off the call, coming back on if you are having difficulty hearing. Outside of that, we still have the recording. All right. So I hope that improves for you. All right. Perfect. Cool. So that's what we have. Now, I'm going to get rid of. Did anyone want to take a screenshot of these two things? If not, I will get rid of it in 4 seconds. 4, 3, 2, and 1. Awesome. I'm just going to get rid of the sell. We're going to be talking from this buy perspective. Now, I mentioned that in this field of trading, in the industry of foreign exchange, that price does increase and it decreases in value, right? Even though it's going up overall, it does up and down stuff. Now, there's a reason for it, right? Every movement in the market is calculated, it's determined, right? There's no guesswork here. The market doesn't just move just by itself. There's always a reason for it. Now, last week I mentioned as a retail trader, which is us here, we participate in the market in 2 ways. We buy or we sell. There's a bonus third, which is we wait. Buy, sell, or wait. Waiting would be if we're waiting for price to give us the discount that we're looking for before we get in another trade. But generally speaking, we just buy and we sell. The market moves in waves. This pattern right here is that wave. Okay, this pattern is a wave. And the market in itself, while it's deciding which direction it goes, it's going to do one of 2 things, right? One of 2 things. And those 2 things are, where is the thing? It's either going to seek and destroy, oops, right? Or it's going to rebalance itself. 2 things. Today, we're going to be talking about balance. Right? We're going to be talking about balance. So price loves to seek and destroy or rebalance itself. And when I say rebalance, this is what I mean. Price will never just shoot up in one direction. That's just not going to happen. It's always going to look like it's going upstairs. Okay? But the thing about this going upstairs thing is there's some balance to it. I'll show you on an actual chart, but I want you to get the principle. When it goes up, it's going to come down. It should come down relatively equal of way down. We could say equilibrium will be 50%. If it comes above 50% and then it goes back up again, comes down about 50%, goes back up again. then that right there is an evenly trading market. That's completely fine, right? That's what we want to see. That just tells us that the buyers took control and then the sellers took control. Then the buyers took control, the sellers took control. Sometimes, however, in these markets, we would see something like this happening, where the buyers took control, the sellers barely were able to do anything, and then the buyers took control again, and then the sellers were barely able to do anything, and so on and so forth. In a market like this, it's like very, very, we call that bullish, right? Where it's one sided. If this was a tug of war, it would be very one sided. It would be apparent that the bulls have complete control and no one is selling. But let me ask you this, just think of economics here. If the people, let's say it was just us on this call, right? We are the world, the 15 people of us on the call. If out of the 15 of us, 14 of us were buying and one person was selling, how do you feel about those market conditions? Is it stable or unstable? Is it sustainable or what's the opposite of sustainable? Unsustainable? Insustainable? Whatever. Is it not sustainable? Let me know. There are 15 of us on here. 14 of us are buying. One person is selling. How do you feel about those market conditions? Yeah, it feels unstable. Like it's not going to last forever. Eventually, that seller will not be able to meet the demand of all these people that want to buy stuff. Now, if it was a case that we had 7 buyers and 8 sellers, then everybody could get a piece of the pie, right? One person buys, the other person, there's always a seller to the buyer. Whenever someone is buying something, someone is there ready to sell it, right? There's that nice push and pull. That's why I mentioned balance. Okay. Now, in the market, when we're looking at charts, I'm going to show you in a second, there's there's always going to be something on the chart, right? Because remember, it's mentioned that we buy at this higher low. There's going to be something to the left of that. Let me do this, right? There's something to the left of this area that tells us that this right here is an area that we can probably get a buy from. One of those things is going to be an area that needs to be rebalanced. It's going to look like this, right? Let's say if there was a buy environment, a bullish environment, it meant that there were lots of buyers, very little sellers. So that means this area here, there's some imbalance there. This area here, there's some imbalance there. Because of that imbalance, at some point, some way, price needs to come back to these areas to rebalance itself, right? It needs to rebalance itself. And that is why price goes up and it comes back down, because it's always looking to balance itself, right? Oh my gosh, where's my chart? If you were following so far, drop an AC in the chat. If you feel completely lost, all right. If you feel lost, just put NC, NC for not clear. But if you're okay for now, give me an AC. Where did my thing go? All right. Cool. So I'm going to keep coming back to this one pattern. Okay. So when we see this low became a high, when this high became a higher low, the only reason it came down here is because the buyers were in control and the sellers need to come back and bring balance to this environment. When balance was created, the buyers can then step back in and push the market higher. All right, so let's show you this in real time here. Well, first, we're going to look for those areas that stand out as being out of balance. Okay. Now, when we are looking for those areas, right, when we're looking for the areas that are out of balance, I want you to take this approach. I want you to imagine 3 candles. Where is this? I need this solid. All right, we're going to use 3 candles to determine whether we are in balance or out of balance. All right, so the candlesticks on the chart are, I didn't talk about those. And I know there are people that are new. All right, these things that we're looking at here, these purple and green things, these are candlesticks. The green ones, those represent prices increasing in value. The purple ones represent prices decreasing in value. Green is going up, purple is coming down. All right, that's what those mean. When you have a lot of one color going in any direction, especially if it's more than 3, then that is some imbalance occurring. All right, that means it's just going in one direction. That looks like this as opposed to this. All right, so we want to see price going up and coming back down. All right, so this would mean that there's some imbalance happening. But imbalance gives us an idea of where to look, where we should be putting our attention. All right, and I'm going to give you some insight on how these candles do what they do. Now, it's called a candlestick, rather a Japanese candlestick, because unlike our candles, they have a wick on both ends, right? They usually have a wick on both ends. Promise you this is going to make some sense. And this wick gives us information so that we know what's happening. All right. So there are 3 parts to it. Well, technically 2 parts to it. The big chunky part, that is the body. And then this skinny bit here, that is the wick. And the other one is the wick. The wick represents where price has been, but it didn't stay there. The body represents where price is, right? This is the space that we occupy right now. So since this chart that we're looking at, it represents the passage of time, the way price changed over time, this is what happens. So if we have this candlestick started, I want you to imagine that this started at $10, right? Where this is right now, this is a $10 mark. So at 7:34, the price was $10 and it started to increase in value, right? All right, I need to back up a little bit because there's some vital information just to make sure that you have. Whenever we're trading, we're going to have different charts that we can look at, right? That we can look at what happened over certain periods of time. If you look here close to the top of your screen, you're going to see 1M, that's 1 minute, 3 minute, 5 minute, 15, 30 minutes, 1 hour, 4 hour, daily, weekly, monthly, etc., etc., etc. So if we are on this chart right now, the 1 hour chart, every time a candle is formed, it's going to take 1 hour for it to close. So it's going to open at 7 o'clock and then it's going to close at 8 o'clock. And then another candle is going to start at 8 o'clock and close at 9 o'clock. Okay. So if this candle opened at $10 at 7 o'clock And then at 8 o'clock, it continued to increase in value. And let's say it closed at $20, right? If all it did was go up solid, and it closed at 20, there will be no wick at the top. All right. There's no wick. It started at 10, it went up to 20. That's it. If the candle opened at $10, moved, pushed all the way up to 25, but by the time 8 o'clock came around, the value was at 7. This is what's going to happen. It started at 10. It went up to 25. So to give the information that it has been at 25, we're going to see that a wick was formed, right? So it came up to 25. Anytime it drops below a price, you're going to start to see this line show up. And that line is the wick. All right. So the wick just tells us where price has been. The body tells us where it definitely closed on whatever time frame that you were looking at. If this aspect with the candlesticks, if that's clear for you, just give me AC in the chat. All right, good stuff. So that's how candlesticks move, right? That's what candlesticks do. Now, because we know that they open and close, it's going to help us identify how price is actually moving just by looking at these candles. It's going to tell us if price is really going up a lot or if it's moving in a more of a balanced state. Okay. So if this is how price have moved, it started at 10, went up to 20, closed at 20, opened at 20, went up to 30, closed at 30, open at 30, 40, et cetera, et cetera. This tells me that price did not have a chance to fall, to come back down. It just kept going up. Okay. Which is okay. This right here, all right, we're gonna get to that. I'll do that a step later. Oops. So price starts at 10, goes up to 20, closes. Then this candle opens at 20. Instead of coming up first, it comes back down, right? So it closed at 20. The 8 o'clock candle opens at 20, goes down to 15, and then comes back up and goes to 30, which then means we have a wick. Right? So we have a wick at the bottom of this candle. Here's what this looks like in reality. In order for this wick to happen, price had to start at 10, go to 20, come down to 15, go back up to 30. All right. Let me know if this part here, if this makes sense to you. Are we good? All right. Good, 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 good. Excellent. All right. So when we see a candle form like this and it's solid, if it's blue, it just went up. As long as we see the wick, that wick represents price coming down. All right. So these two candles, just by looking at these, we see the pattern that I told you guys about. All right. Promise we're going to tie this stuff together. All right. So we have that happened. Then at this point, price opens at 30 and comes down, right? Comes down like this. Should I do that? Yeah, might as well. I'm gonna do it. So it opened at 30, and instead of going up first, it came all the way down, came below 20. So this third candle now ends up in that 15, 17 area. Now, this part might get a little sticky, but just flow with me here. Where this candle opens and closes is going to be important. As long as this candle um does not go below the previous candle, right? Because these are blue candles, I'm going to talk about below. Once this candle does not end up below this candle, it's going to stay blue. If for whatever reason, okay, no, that's not true. This, I need a marker. All right. This is a close. All right. So this point at the top here, that's where the candle closed. This, let me get the arrow. This point where it closed on the hour, so this closed at 8 o'clock. Since it closed up here at 20, it's going to be opening of this particular candle. All right. And once price stays above the close of the previous candle, it's going to stay blue. If it moves below the close of the previous candle, it's going to turn red. All right. I know I said a lot there, but if you're following me, that'll be sensational. So this, it closed at 20. If instead of going up, if any number that's above 20, it's going to be blue. If it starts and goes to 19, 18, 15, it's going to turn red. All right. Was that easy to follow? Or am I getting a little confusing now? Let me know. All right. Good stuff. All right, good. So that open and the close of the candle, that's going to give us that information. All right. Right. Repeat. Okay. Let me remove that for a second. And let me put some points here. Let me put some visual aids. So this is $10. This is $20. This is $30. All right. This first candle, it started at $10 and it increased in value until it got to $20. This candle opened at $20, dropped down to 15, and then before the hour ended, it pushed all the way past 20 and all the way up to 30. Okay. Now, this third candle, right, where we are at right now, this candle now opened with a value of $30. Instead of going up, it started to come down. As long as this candle moves or trades below the close of the previous candle, the color is going to change. Because we're talking about a buy perspective, as long as this is going down and it's less than $30, so this could be $28, 27, 25, whatever it is, as long as it's coming down, this is going to be red. If it opened at 30 and went to 31, 32, 33, this would have been blue instead of red. Okay, Branch, let me know if you're clear on that. All right, perfect. Awesome. All right. Um, good. Good, 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 good. So I'm not going to go much deeper than that just based on these things, but I will show you on the chart what we're looking at. So this this situation here with these four candles, these just kept going up, right? Because none of these candles ever, when they opened, they never went below the close of the previous candle. They just kept going up and up and up and up. This, however, it came up, it went down first, and then it came back up. This one may have gone down first and then went back up. All right. So if this one also has wicks, then when we look at it, in reality, it's doing this, right? Which is what we want. We want price to go up, pull down, go up, pull down, go up. Whereas this is just going up. Okay. This example has a lot of imbalance, right? This market is imbalanced. This is like when I mentioned, all right, no worries. This one is when I mentioned that we had 15 people on the call and 14 of them were buying, one person was selling. That is this right here. It's not stable. It can't sustain itself. So if you know it can't sustain itself, then it stands to reason that this environment is going to crumble. It's going to fall apart. And falling apart just happens to mean that this is going to drop. This is just going to fall out the sky. Okay. Whereas this one, because it's moving in a trending market, like I showed you at the beginning, you're seeing a series of higher highs and higher lows. Buyers and sellers exist in this space. It's a better relationship between the buyers and the sellers. It's more sustainable, right? It's definitely stable. So this can continue to go higher than this one. All right. So let's make this make sense. All right. So we are looking at this between these green vertical lines. All right. So we have price go up, comes down, goes up, comes down. Right. We have all of this happening. And then it just jumps all the way up here. One of the simplest ways to tell if what you're looking at is balanced is if you're looking at three candles, the wick of the first and the third candles should touch or intersect or cross a bit, right? So that would look like this. The first and the third candles, their wicks there should be no space in their wick. Right? So this one comes down here and this one stops up here. So there's no space. Now we usually look at three candles to kind of determine that. If for whatever reason this was the case, let's say there was no wick. Now there's a space here. And this space is what we would call imbalance in the market. Okay. This is balanced. This is imbalanced. And all we're going to look for is we're going to count three candles and see if the wicks, if there's a space between the wicks. If there's no space, then that market is balanced. It's going to continue doing what it's doing. If it's out of balance, eventually it's going to fall apart. right? And we look, that is what we look for. Let me put our pattern back here. So when I say something happens to the left, that tells us high, higher, low, right? We want to buy at the higher low, and that higher low should occur in an area of imbalance. As long as we're able to find that area of imbalance, we would know that eventually, right, this happened, price was moving up, imbalance was created. The imbalance is not good. The imbalance is going to cause this bullish movement to become unstable, which means it's going to fall apart, it's going to fall down, and it's going to want to rebalance itself. So at some point, price is going to want to revisit this area that was out of balance before. Now, when it does, we will be ready for it because we knew it was coming. So on principle, let me know if you think you're following so far. All right. If you're looking for a buy, this is the pattern that we look for, right? Series of higher highs and higher lows. We know we want to buy at the higher low. That higher low is going to show up more than likely in an area of imbalance. How do we know it's an area of imbalance? We're going to look for 3 candles and we're going to see if there's a space between the wicks of candle 1 and candle 3. If there is a space, that's an area of imbalance. We're going to pay attention to it and see what happens. All right, so let's see if that is true. All right, let's look here. All right, so we're going to use this as an example. All right, make it easy. If we were down here and we're looking at up here, would you say price is overall? Is it increasing in value or is it decreasing in value based on from this green line over to this green line? Has it been increasing in value or decreasing in value? Has it been going up? Right? Series of higher highs and higher lows. All right. So since we were getting this series of higher highs and higher lows, we are looking for price to continue going up, right? So we are watching and we see this happen. Candle number 1, right? Candle number 2. This one pushed up higher. This is the first. Let me zoom in. This is the wick. This is the wick. There's a space between the wicks of candle 1 and candle 3. So this is an area of imbalance right here. Right? That's the area of imbalance. But we're going to keep going just to see what happens, what price does. Just because we found the area doesn't mean that price will come back right now to rebalance itself. It just tells us eventually, at some point in time, it would come back to balance itself. So let's see. Let's jump forward. All right. So 1, 2, 3, we got a space between there. But then also 1, 2, 3. This is the wick. This is the wick. We also have some imbalance right here. So how we usually look at this thing is we are still using the context of this pattern, right? This pattern still needs to show up. So if we are here, if we're starting at this point here, then we need to get this, we need to see this happen. So we wait, we're watching, price pushes up here, right? We would then wait to see, do we get price coming into this area of imbalance or does it come into this area of imbalance? Right? And it comes here and it also pushed up. So when it gets into that space, that area of imbalance, we want to see if it at least covers 50% of that area of imbalance. It doesn't have to be perfectly 50%, right? But that's just a principle that we say. If it goes to 50% of the imbalance, then that area has been balanced. Okay? If we see price trade into that area that you were identifying before, if it covers at least 50% of that, we would say, you know what? This area has been balanced and we are out of here. All right. So just for this, we had this is a low, low. This is the high. This is the higher low. And this was the higher high. So imbalance area A, let's call this imbalance area A, that has been balanced. However, we're not done. We're not done because there was a second area of imbalance, B. So if we are currently right here, if you're currently right here at HH, sorry, right, which created a new high, and we know that this imbalance exists here, we're kind of saying we are mentally prepared that it could come down to this space, or it could just continue going up, right? That's why we say we either buy, sell, or we wait. But the whole game here is for us to be prepared, right? So we could pay attention to it to see if anything happens. Because if price is going to continue going up, this pattern has to repeat itself. Right? So we're going to need to get a higher low. And if you're paying attention here, we're looking at these candles. This is a wick. 1, 2, 3. This is the wick here. This is the wick. There's no space. 1, 2, 3. This is a wick. Wick here. Very little space. 1, 2, 3. No wick here. This is the wick here. So there is a space here. So it's possible there's some imbalance here, right? As you get more advanced in your trading, you're going to know where to ignore the imbalance areas, right? Because not every area of imbalance is going to be valid for you. Some of them are not going to be worth your time, but it's going to take some time and skill for you to tell the difference. I'm not going to go through all of that now, but we will get to it eventually. So here we are. Right. So we look to see if this is going to keep going up and creating that trend, then from HH here, we need to get a higher low. That higher low should occur during this area of imbalance. So we will wait to see what price does. All right. So it came here, this candle pushed up, but then the other one came down and then it continued going down. All right. It continued going down. But then, so this possibility of it going up is now, we say it's invalidated. It no longer applies. Remember, the trend is a series of higher highs and higher lows. When this happened, when this purple candle got lower than this higher low, we now have a lower low, and that's not something that we see in an uptrend. Let me know if that part that I just said, if you're following me so far, or if it started to get a little confusing there. I'm speaking about this area here. Let me know if you are still following or if at this point, about 40 minutes in, if you feel like your mind is a little fried. Let me know. Following? If this was going to continue going up, we would need to keep seeing higher highs and higher lows. All right. So we would need a higher low here and a higher high. That would tell us that we were going up. If we stop getting higher lows and instead we got a lower low like this, then this uptrend that started here is no longer valid. All right. You could just write that down, save that for future you. But as you grow and develop, you'll know that when something is invalid, you have another option. You're going to know that you can look somewhere else so that you can determine what your next move is going to be. All right. Since we were already paying attention to this possibility for this area of imbalance, here's what happens to our perspective. Right? This is what happened to our perspective. Yes, we didn't get the higher low here. Instead, it pushed down. We had a pattern here that we thought was going to repeat itself, but it didn't. So now this trend is no longer valid to us, but we do this now, right? We then decide, like, okay, we're going to forget this as a higher low since that was invalidated just now. We're going to forget this as an area of imbalance. We're going to forget this as a higher high. And we're going to see if this holds true. Right? Because this is still an overall low, an overall higher low, sorry, because this low is down here. This is a higher low. This is a higher high. Sorry. We will use this. This is a higher high. And now this is potentially a higher low. All right. It's in an area of imbalance, and we're going to see if it holds. If it does, great. All right. And it did. So now we have this pattern that works out for us, right? Low to high to higher low to higher high. All right. The steps that we took, the steps that we took were we know that this pattern is showing up. We know that this pattern is showing up. We know that we want to buy when we get a higher low. And we knew that a higher low would show up in an area that probably has imbalance. So we were waiting for this to happen. We weren't placing any buys or anything until this happened. Now, along the way, as we saw here, there was an area of imbalance here, but then we also saw an area of imbalance that showed up around here. Now let's go back to our notes real quick, right? Let's go back to our notes. And let me know if you understand why this area of imbalance wasn't as worthwhile as this area of imbalance. Just using the perspective of the discount. Remember we said earlier in the call, if it's 50%, 60%, 70%, 80% off, that is what we want. Right? We want to buy when it's 50, 60, 70, 80, 90% off. If it's 30%, 20% off, that's not really a discount and we don't really want it. So if we get an area of imbalance that is, I don't think you guys can see that purple. If we get an area of imbalance that is not within that discounted area that we want, we can ignore it. You can give me AC if at this point, this feels like it makes sense. You guys there? Tish, T, Sharon, SF, Nikki, Mario? Let me know. Because it's all well and good when we have the whole pattern here drawn out. All right, I'll repeat. Let me see if I could. I'm gonna try to slow it down because we need to see it playing out. Um, we need to see it happening a lot more real time. All right, so let's see if we can get this done on the actual chart. Remember at the beginning of the call, all right, at the beginning of the call, we mentioned, let me do it off of the chart. Let me just use the shape. All right, so we have this happens. Let's say you're going to trade, right? And in your notes, you know that, all right, this is the pattern that I need to pay attention to. And at the point where you're looking at a chart, we only have this part of the pattern, right? It's incomplete. So you have your low and you have your high, right? So out of all of this, we only have this first part, right? So we have the low and the high. If this is going to be a pattern for us to buy, then we need to get a higher low. So when we looked at this chart and we were looking at the candlesticks, we're looking at the 3 candlesticks at a time, we realized, you know what? There's an area of imbalance right here. And there was also an area of imbalance around here. Okay. Since we know there's an area of imbalance down here and an area of imbalance here, we're saying, okay, it is possible that price can come into an area of imbalance, find like balance out itself in that space and continue going. All right. So we know that it's possible that price could go up from here or it could go up from here. All right. We know that's possible. So while we are waiting, we're trying to gather as much information as possible. So we say, you know what? Kurt said a discount because remember Black Friday, we want price to be as low as possible. We want price to give us 50% off. We want price to give us 60% off, 70% off, 90% off. We want that bigger discount, Black Friday prices. If we got Black Friday prices, if this orange line is 50 and this is where the imbalance is, this is somewhere around, let's say, maybe 70, 80% off, which is good. This area up here is nowhere near our 50%, right? That's like maybe 10% off. That's not a lot of room for us to make a profit if we were to buy at 10% off. Nikki K. Branch, let me know if you are following me so far. Branch, you can let me know if that was a little easier to connect the dots there in terms of the discount. We want to buy at a discounted price so we can make as much money as possible. All right, cool. So while we are waiting, right? While we are waiting, we realize that price did not, it just traded past this area of imbalance, right? It just went right past this 10%. It came into the 50 and now it's somewhere in this 70, 80% off. Right? I want to be able to go in that, but if you see the recording from last week, it shows you how price reverses, right? How price changes direction. So it came into this area here and then pushed up, right? It continued going. And we were able to see the pattern appear in its fullness, right? We got a low, we got the high, we got the higher low, we got the higher high. So on a principle, by principle, I'm just connecting these dots for you. The first call, all I told you guys was something happens at the lower high. Sorry, something happens at the higher low that makes price change direction. Today, I'm telling you, the thing that happens at the higher low is there's most likely an area of imbalance. How do you identify that area of imbalance? We take a look at 3 candles at a time. Does the wick on candle 1 meet the wick on candle 3? If there's a space between them, then there's some imbalance there. All right, so this right here. Yeah, it's a gap in price. The gap is the imbalance. All right. So anytime you see a gap, that is an area of imbalance. But when you are looking at your chart, not every single gap needs to get your attention. All right. That is going to be part of your growth. Being able to determine which gap is worth your attention. In our example here, the gap that was around 10%, the gap that was around the 10% discount is not worth your time because we want 50% off We want 60%, 70%, 80%. We want big discounts. All right. So if it's not a big discount, we're not paying attention to it. So we won't take those trades. We will wait and see what happens. Because even if it does bounce from that 10% mark, remember earlier in the call, I drew this for you. Price comes up here, comes back a little bit, and then continues going up. This is not sustainable. This shows lots of buyers in the market, not enough sellers. If that's happening, eventually this market is going to crash. It is too one-sided for it to continue going up. If it crashes, it's going to want to rebalance itself. Where does it go? All right. It will go anywhere that there has been a gap. It's a potential place for it to stop. But for us as a trader, somewhere that's below the 50% will be better for us to look. So we may not pay attention here, but we would pay attention here. All right. And that is this whole balancing and rebalancing itself thing. That's one of the two ways that price moves. Right? That's why it goes up. That's why it comes down. That's why it stops in a certain place. That's why it changes direction in that place to balance itself out. So with that in mind, with knowing that you have that principle, this is why wealthy people like to make money in chaos. When people are fearful, right? When people are fearful, let's say stocks and all this stuff, they're going to start selling off their things. That's fear. Wealthy people will capitalize in those conditions. We're going through a depression, value of houses drop. Guess who goes and buys a whole bunch of houses? Wealthy people. The price is low. We're getting it on the cheap. We're going to buy it low. When the market stabilizes again, they already own it, and then they're going to sell it off for a higher profit. But being in this space, learning how to trade, it's not just for you guys to be able to trade Forex. Let me turn off my camera here a second. Right? It's not just for you guys to be able to trade currencies. You could use this knowledge for anything. So if you already have, let's say, investments, whether it's through like financial advisors and that sort of thing, if they're able to tell you like, hey, yeah, we have some of your investments in the S&P 500, you could literally go to the chart for the S&P and you can make suggestions because it's your investment. If you're seeing that the price has been going up and up and up and up, you can decide, you know what? Things that go up in one direction all the time, they don't necessarily keep going up all the time. So I might want to take some money off the table. You don't have to exit completely, but you might take some off the table. Or let's say something happens in the world and markets crash. You might decide, you know what? I had an investment higher up, the market crashed. Instead of taking out what was there at the top, you know what? I'm going to reinvest at this lower price. Those are things that you're able to do because you know you have an understanding of how money moves, right? All right. Cool. I think we covered a lot. Again, that one pattern that I showed you from the low to the high, to the higher low, to the higher high, this is all in a bullish environment. This is all when we are placing buys in the market, right? You're looking to see price increase. That one pattern, there's so much information there, but we're going to unpack it slowly so you could compound your information. As long as you're taking notes, you can ask questions in the chat, right? Learn from each other, go back into the Run the Play Academy so that you can get some more insights in there. All right, but trust me, the the deeper we go on this one pattern, you're going to see so much more. All right. So with that being said, this is where the call pretty much ends. If you have any questions, I would leave the line open for another 5 minutes or so, depending on how many questions come through, if we have any. And we could definitely close out. If you want to leave right away, you're free to do that.